question which is a continuation from the previous one. We are dealing with the concept of interest on loan. This question is different because over here we'll be talking about loan given to the firm and loan taken from the firm. You can see at the top we have given the topic as interest on loan given and taken, and we'll discuss about that, what is the implication of that while preparing the profit and loss appropriation account. Remember this very clearly before we get started, that both interest on loan given to a partner and interest on loan taken from a partner are charges against profit and income, indirect income, so therefore they should be taken in the profit and loss account and not the profit and loss appropriation account. But in most of the times when you are doing sums for partnership, you are basically asked to prepare the profit and loss appropriation account only and not the profit and loss account. So if profit and loss account is not asked and you are asked to prepare the profit and loss appropriation account, the first treatment which should be done is to show the actual net profit, which we'll do just now. Now first let us read the question and understand what the question is telling us, and let us proceed further. Now let us see. First, over here there are three partners, Ajay, Vijay and Sanjay, with a PSR of 2:2:1. It will be invariably given the profit sharing ratio. If the question does not say anything about the profit sharing ratio, you know what to do. You have to distribute the profit among the partners equally. Now you can see their capital balance on 1st of April 2019 was 3 lakh, 2 lakh 50,000 and 1 lakh 50,000. This is the capital balance given on the beginning of the year, that was 1st of April 2019. On 1st April 2019, Ajay took a loan. See over here, Ajay has taken a loan, and how much loan has he taken? 60,000. So Ajay will pay interest to the firm on 60,000 at whatever percentage has been mentioned. Sanjay gave a loan. Sanjay has given a loan. You can see over here, Sanjay has given a loan of how much? 50,000. So the firm will pay the interest to Sanjay's loan at 50,000 at whatever percentage is given. Vijay has drawn 2,500 per month. So all the three partners has done something. You can see very carefully. Ajay has taken a loan, Sanjay has given a loan, and Vijay has withdrawn money from the firm. Now what does the partnership deed provide? The partnership deed provides first one, interest on capital at the rate of 6%. You can see the capital has been given to you 3 lakh, 2 lakh 50,000 and 1 lakh 50,000. On that we'll calculate 6% interest. Second, interest on drawing 12% per annum. You can see very carefully that one of the partners, Vijay, has withdrawn 2,500 per month. But when has the money been drawn has not been specified, and you know when it is not specified when the money is being drawn, half year's interest on drawings will be calculated. So we'll calculate half year's interest on drawing. After that, you can see very carefully interest on loan given to the partner, given 10% and taken from the partner 6%. And the profit of the year is 80,000. Prepare a profit and loss appropriation account. Before we jump into the question, first let us understand the basic calculations over here. Number one, we have the calculations for interest on capital. You can see over here it is 6% of 3 lakh, it will be 18,000. 6% of 2 lakh 50,000, it will be 15,000, and 6% of 1 lakh 50,000 will be 9,000. So it is very simple calculation, mental calculation. So I'm not showing the working. I repeat again, 6% of 3 lakh is 18,000, 6% of 2 lakh 50,000 is 15,000, and 6% of 1 lakh 50,000 is 9,000. So these are the three interest on capital which we'll be having. Okay, next one we have an interest on drawing 12% and 30,000 over there. So if you are having to calculate that for half year, you'll end up getting the calculation. If you see very carefully, 30,000 is the drawings, 12 by 100 is the percentage, and it is for half year. Okay, so we are cancelling the zeros, we are cancelling this, we end up getting 1800 as the interest on drawing. Now comes the important part, the calculation of interest on loan given and interest on loan taken. So what is the loan given? Who has taken a loan? Okay, Ajay has taken a loan, 60,000. And what is the percentage? See very carefully, 10%. What will be the amount? 6,000. So over here, the firm will receive 6,000 from Ajay as the interest on loan. And how much the firm has to pay? You can see over here, 50,000 into 6 by 100. Why? Because it has been provided that the interest will be paid at 6%. Now let us cancel this and we can see 3000. So this is a negative figure and this is a positive figure. Repeat again, this is a negative figure and this is a positive figure. Therefore, the actual profit will become 80,000 plus 6,000 minus 3,000. So we'll have the figure of 83,000 in the profit and loss appropriation account, first line after the calculation. I repeat, 80,000 is the profit which has been given to us, 6,000 is the income, indirect income, and 3,000 is the expense which is for the interest on loan. These two calculations are for interest on loan. This is received and this is paid, and therefore the resultant profit we can see over here is coming to 83,000, which will be the starting point of the profit and loss appropriation account, which we'll just do. After going through the informations in the question, and we will now prepare the profit and loss appropriation account. If you remember, the last calculation which I had done was the calculation of how much profit will be transferred to the profit and loss appropriation account. And if you remember that we have added 6,000 with 80,000 because this was the interest received, and we have subtracted 3,000 from that figure, that was the interest paid. These were the interest received and paid on the loans which were either taken by the partner or given by the partner to the firm. Okay, so if you see over here, 80,000 plus 6,000 is 86,000 minus 3,000. The resultant profit is 83,000. I'm telling again that the question has only asked us to prepare the profit and loss appropriation account. If they had asked us to prepare the profit and loss account, then this treatment would have been in the profit and loss account. Now let us move on with the first information is to interest on capital account. There are three partners, Ajay, Vijay and Sanjay. And if you see very carefully, I have written down the capitals over here, 3 lakh, 2 lakh 50,000 and 1 lakh 50,000, and the interest on capital according to the question was 6%. We will calculate 6%. It is a very simple calculation. So you can see 6% of 3 lakh will give us how much? 18,000. Now 6% of 2 lakh 50,000 will give us 15,000, and 6% of 1 lakh 50,000 will give us 9,000. So the total interest on capital will be the sum of 18,000, 15,000 and 9,000. So 18,000 plus 50,000 is 33,000 plus 9,000. The total interest on capital comes to 42,000. This is step number 1, which the partnership deed had provided interest on capital at 6%. The partnership deed has also provided interest on drawing at the rate of 12%, and Vijay has withdrawn this amount of money, 2,500 per month. And if you remember the calculations which we had done, we had got the interest on drawing as 1,800. So we'll take this figure, okay, and we'll write over there by interest on drawing account. Those who have forgotten the calculation, no problem. 30,000 into 12 by 100 into 1 by 2. Why 1 by 2? Because the date of drawing is not mentioned. And how 30,000? Because 2,500 per month, 2,500 into 12 gives you 30,000. So what have I done over here? Cancel this and got a 6 and cancel these two. So 300 into 6 is 1,800. Now question is, can you do this calculation over here? Yes, you can do this calculation over here, but it is not advisable to show the calculation. You should show the calculation in some rough work. Okay, so where the mental calculation can be done, you don't have to do the calculation at all. We have done the mental calculation over here. It is always advisable, students, wherever the question has asked you to calculate interest at the rate of 10%, at the rate of 15%, at the rate of 5%, do not use your calculators. You can do it mentally. Okay, so Let us see over here what we have got, and ultimately you know what is the result. The result is a profit, because the credit side is heavier than the debit side. So what is the total in the credit side? The total in the credit side, you can see, is 84,800, and over here we are having 84,800. Now if 84,800 is subtracted with 42,000, we are ending up getting 42,800. So this is the profit. So to profit transfer, where is it transferred? Capital account. Profit transfer, we have Ajay. If you want, you can write transfer to capital account. It's just profit transfer. Ajay, Vijay and Sanjay. Now if you remember, what was the PSR? 2:2:1. So 42,800 will be divided in the ratio of 2:2:1. So if you divide 42,800 by 5, we end up getting 8,560. We end up getting 8,560. How did we do that? 42,800 divided by 5. Why have we divided by 5? Because the PSR is 2:2:1. We have added it. So 2 plus 2 plus 1 is 5. So 42,800 divided by 5 gives us 8560. 8560 into 2 will give us 17,120 and 17,120. So the first two partners will get 17,120 and the last partner will get 8560. So we'll write this over here: 17,120, 17,120 and 8560. It is always important that we do a cross-checking of the figures so that we don't make any silly mistakes. So let us see over here: 18,000 plus 15,000 plus 9,000. If we add it, we get 42,000, and if we add 17,120 plus 17,120, we get 34,240. 34,240 plus 8,560 gives us 42,800. So the calculation part is absolutely clear, I hope. Now this basically is the profit and loss appropriation account with the case where the partner has provided a loan and one of the partners has taken a loan from the firm. I have already explained in my previous video that why people take loan from the partners, because sometimes it may not be possible to always take a loan from bank. So therefore they can take a financial assistant in the form of loan from the partners. What is the advantage to the partners? The advantage to the partner is that even if there is a loss to the firm, the interest on loan will be provided, which is not always in the case of interest on capital. Interest on capital is only provided when there is adequate profit. If there is not adequate profit, then sometimes the interest on capital may be provided in full, but that will be done later when we deal with how to treat losses in partnership. Keep watching my videos. If you have not yet subscribed my channel, subscribe it, press the bell icon and share with your friends so that they also get benefited from it. Thank you.